Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Hi there and welcome to Better System Trader. I want to start this week's trading thought talking about the Petronas Towers. The Petronas Towers in Malaysia are the tallest twin towers in the world at 452 metres tall or 1,483 feet. Now, because of the ground underneath the building site, they had to lay some really deep foundations up to 114 metres deep. That's 374 feet. Without these deep foundations, the building would run into problems. In fact, during construction at around the 72nd floor, they discovered that tower number 2 was leaning about 25 millimeters or 1 inch from vertical. So to correct that lean, the next 16 floors were slanted back the other way. And they even hired specialist surveyors to check the lean of the tower twice a day until the building was completed. Now, obviously, the foundations anchor the building and keep it from falling over. And even though they're not visible, they're probably the most important part of that entire construction. And when you look at constructing a portfolio of strategies, there are a couple of key concepts or foundations to consider there as well, so that you have a solid portfolio, one that will hopefully weather all types of hostile conditions. In this week's Trading Thought, we're going to hear from 2 guests who will explain how they construct portfolios and also mention some mistakes that traders sometimes make during portfolio construction, which you need to be aware of. So let's start out now with Gary Hart from Trend Finder Trading Systems. Gary's going to explain the benefits of a portfolio strategies and we'll take it from there. So I'm glad you mentioned correlation there because I wanted to ask you a little bit about portfolios because I've seen on your website that you do quite a bit of portfolio construction with all the strategies that you built. So I guess firstly, why don't we start with why do you think it's so important to have portfolios of strategies?
Well, one is simple math. When you combine, multiple systems, especially if they're uncorrelated or I mean, even if they have 90% correlation, when you combine them, you get to add up the profits, but the drawdown is not additive unless, you have 100% correlated strategies that all have drawdowns at the same time. So when you combine strategies that have low correlation, you benefit from, let's say every strategy, let's say you have 5 strategies that each make $100,000. So that's $500,000. And say the drawdown in each of them is, let's just say 20,000. Well, your final number then is 500,000 net profit, but you're not going to have $100,000 drawdown because all those drawdowns aren't going to happen at the same time. So one, it's just simple math. The more strategies you can have, the better the math works. And then secondly, you never know when a strategy is going to not perform anymore or when an edge is gone or when when a strategy is going to go bust. So it also protects you by having more strategies. You're protected by when something goes wrong or starts having big losses.
Okay, so how do you actually go about constructing these portfolios though? Like how do you figure out or what are you looking at when you're trying to determine which combination of strategies are a good fit for each other?
When I first created swing trading strategies and looked on making a portfolio out of them, I figured this combining swing trading and day trading would be a good fit because day trading does well when the market's really volatile. And then the swing trading, it does well in all markets, but it's going to have its biggest losses during volatile markets, but it's going to do well in the less volatile period. So it seemed like a good fit. And then I started testing it, and sure enough, it was. It worked really well. And I found a really good ratio, at least for my systems, was 1-to-1, having one swing system for each day trading system. But when I look at combining, and once I got to the point where I had many systems to choose from, there's no way I was going to combine all of them. I simply just looked at the correlation and put the systems that had the least correlation together. And so when I built the portfolios that I show on the website, that was the idea. So whatever systems have the lowest correlation, put those two together, and then the next, and then the next, and then just kind of build them up from there.
And now let's hear quickly from Stefano Serafini about how he constructs a portfolio, and he also shares with us a common mistake that traders can sometimes make when constructing a portfolio strategies. All right, thanks, Stefano. Now, I'd like to have a chat to you about portfolios. How do you actually go about choosing strategies to put into a portfolio?
Yeah, I have made a lot of study about it, and I've reached out that one of the most important things is to look at the last real money, what it turns out in real money after backtesting. And I choose only the system that has a good run up also in the real money. After that, I look at the correlation and real money between each strategies. And that you could do it with a portfolio trader of multi-chart. You could make this analysis. And I don't look at the backtest period because it's a little bit mistake, because you could also have overfitting problems and maybe the correlation are not correct. So I'm looking at the very recent period and look at the correlation between the strategy when they ran in real money. So what I do for the competition, for example, is taking my past strategy of the last year and choose the ones that don't have the drawdown at the same time. That's because of the margin requirement and the lower how can I say it? That's when you begin starting the competition, the first thing is to have the maximum performance. So you have to use small account. And with small account, the most problem is that you have, let's say, for example, 4 strategies that have drawdown at the same time. You could have big problems. So my focus was to choose strategy that don't have high correlation in order to avoid simultaneously drawdown. And that's worked fine.
Thanks to both Gary and Stefano for sharing insights into portfolio construction. If you'd like to hear more from those guys, you can check out episode 85 with Gary and episode number 112 with Stefano. Now, before we wrap up, just a quick reminder that if you're on the Better System Trader emailing list, I sent you an email earlier this week asking for your advice. I'm looking to make some changes to Better System Trader starting in 2018, and it would really help to get your input. So please go check out that email and click on the link. It's very quick. It'll literally take you 1, maybe 2 minutes. So it's very fast, but it will really help me out. So thanks for that. And also a huge thanks to everyone who has already participated in that. Anyway, that's it for this week's Trading Thought. Enjoy the rest of your week, and I'll catch you next time. Okay, well, that's it for this episode. Thanks for listening. I hope you enjoyed the show. Come on over to bettersystemtrader.com. That's where you'll find all the previous episodes, all the transcribes, all the show notes, and all the free weekly trading tips. bettersystemtrader.com.